In 2017, Reid Hoffman, the billionaire co-founder of LinkedIn, accidentally revealed something. In an interview with The New Yorker, he said that when wealthy people talk about buying property in New Zealand, it's actually a code phrase, a wink, a nod, a signal between the ultra-rich that they're quietly preparing for something most of us aren't even thinking about yet. He called it apocalypse insurance. Now, here's what makes this uncomfortable. That was 2017. Since then, the number of billionaires purchasing remote properties, building underground bunkers, moving wealth offshore, and quietly repositioning their financial portfolios has accelerated dramatically. And in 2025 alone, a record 142,000 millionaires relocated to new countries. That's not a coincidence. That's a pattern. So today, we're going to follow the money. We're going to look at exactly what the ultra-rich are doing, not what they're saying in public, and ask the one question the financial media keeps ignoring. What do they know that the rest of us don't? Stay with me, because what I'm about to show you is backed by real data, from UBS, from Henley & Partners, from leaked financial documents, and it tells a story that is far more calculated than you might expect. Let's start with a number. $3.55 trillion. That is the amount of untaxed wealth that Oxfam estimates was sitting in offshore accounts and hidden tax havens in 2024 alone. Not over decades, in a single year. But here's what's more revealing than the number itself. It's who is moving money, where they're moving it, and when they started accelerating. According to the Henley Private Wealth Migration Report for 2025, a firm that tracks the movement of high net worth individuals globally, a record 142,000 millionaires relocated in 2025. That is the highest figure ever recorded. The top destinations? The UAE, Switzerland, Singapore, and quietly, New Zealand. Now, if this was just about lower taxes or better weather, that would be one story. But the type of investments these individuals are making tells a completely different one.
A 2025 UBS Billionaire Ambitions report, a survey of actual billionaire clients, found something striking. When asked about their top concerns for the coming year, 66% said tariffs, 63% said major geopolitical conflict, 59% said policy uncertainty. These aren't entrepreneurs excited about opportunity. These are people stress testing their financial survival. And the investment decisions that follow from those fears, that's where things get very interesting. Wait a minute, could you please subscribe our channel so you don't miss the updates? And also, we really need your support. Okay, coming back. There's an old saying on Wall Street, when the smart money moves, it moves quietly. In 2025, the smart money moved to gold. Not a little, not cautiously, massively. According to the same 2025 UBS Billionaire Ambitions report, 96% of billionaires surveyed said they plan to either maintain or increase their gold allocations. 96%. That is near unanimous. A year earlier, a 2024 UBS study showed that 40% of billionaires were already planning to boost gold holdings specifically because of, and I'm quoting the report here, global economic instability, geopolitical risks, and fears of market corrections. The result? Gold surged over 55% throughout 2025, blowing past $4,000 per ounce for the first time in history. Ray Dalio, the founder of Bridgewater Associates, the world's largest hedge fund, went public with his recommendation. He told investors they should consider allocating as much as 15% of their portfolios to gold. That's 3 times what most traditional advisors recommend. Goldman Sachs and Morgan Stanley went further. Both firms proposed a new architecture for portfolios, shifting from the classic 60-40 stock-bond split to 60% stocks, 20% bonds, and 20% gold. Now, think about what it means when the world's largest financial institutions that are the financial system, start recommending you hold 20% of your wealth in a physical metal that doesn't rely on that system. They're not saying the system is ending, but they are saying don't put all your trust in it.
The money is just one part of the strategy. The physical preparation is another, and this is where it gets genuinely extraordinary. Let's talk about Mark Zuckerberg first, because his case is the most documented. On the remote Hawaiian island of Kauai, Zuckerberg has been constructing what is described as a 5,000 square foot underground bunker beneath his 1,400-acre Ko'olau Ranch compound. According to reports, it includes soundproof doors, independent food and water supplies, and multiple escape hatches. But Zuckerberg isn't alone. Peter Thiel, the billionaire co-founder of PayPal, purchased a 477-acre estate in New Zealand, complete with an underground lodge. Thiel even obtained New Zealand citizenship,
a process that typically takes years in just 12 days, reportedly through a special investor pathway. Then there's the case that security expert Al Corby described to The Hollywood Reporter. His firm, SAFE, Strategically Armored and Fortified Environments, recently completed a project on a 200-acre island fortress somewhere in the United States. The details are extraordinary. A 30-foot deep lake surrounding the compound. The lake is skimmed with a flammable liquid capable of igniting into a ring of fire. Water cannons that can intercept threats up to 500 feet in the air. A shelter designed to withstand a blast 1 mile from ground zero. This isn't paranoia. These are engineered, architect-designed multi-million-dollar infrastructure investments. You don't spend this kind of money on something you think is a low-probability event. And these aren't isolated cases. According to luxury bunker company Vivos, which builds high-end survival facilities, their Europa 1 facility offers private apartments starting at $2.5 million each, capable of withstanding nuclear-level events. Demand, they report, has never been higher.
Hawaii alone tells a striking story. 11% of the island's private land is reportedly owned by just 37 billionaires. Why New Zealand specifically? And what does it signal economically? LinkedIn co-founder Reid Hoffman put it bluntly. New Zealand represents the ultimate collapse hedge. It's geographically isolated, politically stable, has abundant fresh water, agricultural land, and no nuclear targets. It's essentially the world's most survivable country by design. James Cameron, the director of Titanic and Avatar, has been living there for years. He converted 2 dairy farms into organic vegetable farms. He became a New Zealand citizen in early 2025. He's not visiting. He's relocated. Underground shelter firm Rising S Bunkers has delivered around 10 private bunkers to New Zealand in recent years. Vivos installed a 300-person bunker on New Zealand's South Island in 2020. But here's the financial analysis that most commentators miss. This physical relocation is happening alongside a very deliberate financial repositioning. According to a Dartmouth University study published in July 2025, analyzing the offshore financial patterns of global elites, the use of secretive offshore financial structures is not declining. It's evolving. Researchers found that even elites from highly transparent, well-governed democracies, countries like Denmark and Austria, are using increasingly sophisticated methods to move assets offshore, not just to avoid taxes, but to create what one researcher called structural financial invisibility. In plain terms, they're making sure that if the rules change, if governments impose capital controls, new wealth taxes, or emergency economic measures, their money is positioned outside the reach of those rules. That's not preparation for normal times. That's preparation for abnormal ones. Now, here's the question that actually matters. Hey, wait a minute. Still, we are waiting for you support. Please do subscribe. Okay, coming back. Does any of this mean a collapse is coming? Not necessarily, and this video isn't claiming that. What it is claiming, based on documented behavior, verified financial reports, and real investment data, is that the people with the most information, the best advisors, and the most to lose are not behaving like everything is fine. Here's how to think about it economically. When central banks, the institutions that manage the global financial system, start quietly accumulating gold and reducing dollar exposure, that is a signal. When 96% of surveyed billionaires increase gold positions simultaneously, that is a coordinated signal. When a record number of high net worth individuals physically relocate in a single year, that is a signal. Individually, each of these things could be explained away. Together, they form a pattern that serious financial analysts don't ignore.
Ray Dalio, who has predicted major economic shifts before they happened, has spoken publicly about what he calls the Great Disorder, a period of debt crises, internal political conflict, and shifting global power that historically follows extended periods of easy money and growing inequality. He's not predicting apocalypse. He's saying the system is under stress, and the smart money is already positioned for that stress. The question for the rest of us isn't whether to build a bunker. It's whether we're paying attention to the same signals they are. The ultra-rich are not panicking. They're planning. They're quietly moving money, quietly acquiring land, quietly building infrastructure, and quietly repositioning in ways that most people won't notice until the window to do the same has already closed. Understanding why they're doing this and what economic signals are driving these decisions is the most important financial education most people never get. In our next video, we're going to look at something even more specific, the offshore banking playbook, the exact jurisdictions, financial structures, and asset classes that billionaires use to insulate their wealth from systemic risk, and what, if anything, ordinary people can legally learn from that playbook. If you want to understand money at the level that actually matters, subscribe, because this channel covers what the financial news doesn't.